Welcome to yet another video on peaceful weekend investing. My name is Shivendra, and today's video will be divided into three parts. First part, I'm going to talk about the chapter number 20, the intrinsic value or the margin of safety of a particular stock, and how do you apply in a practical way. And I'll be taking one of the live trades which I have shared with you earlier as well in various channels, and how did I apply that and got the maximum gain in that particular stock, and why did I sell it, and at what point I entered, and what was the rationale behind it, so that you can apply that particular thesis into your journey. And second part, which is where I'm going to be talking about some of the sectors which we do, and today is 29th of September 2023, sorry, 25th of September 2023. So you can use that particular video to understand which sectors, as market is correcting, what is the best way of analyzing particular stocks, and how can we be stock specific, in which sector we should be focusing on, and which stocks, and that will be my third part of it, which stocks I am keeping my radar and why. I'll be covering it up at the end. So throughout the video, I'll be giving some of the insights which probably can help you a better investor and better trader. I don't call myself an investor or trader. I call myself a peaceful weekend investor. Reason why it is because it's very, very hard to understand. If you are busy during the week, you want to have a system in place which guides you for a particular stock which you have a good conviction to hold it for long term, and at the same time you also want to create income through taking the opportunity. And that is where, and the opportunities like what we had last few weeks, where it was amazing positive news, all stocks were flying, but you can always take the advantage of that and create quick bucks or income which can be used during these times, which is when the market is correcting, to fund your long term goals or long term stocks as a whole. So let's get started. Uh, so first thing first, we'll go through this particular chart, right? And this is where you understand this. This is very simple and easy to understand. And if you haven't followed me on LinkedIn, and if you are in LinkedIn, you just search me up on LinkedIn. You will be able to find me as Shivendra Bhatia, and then you can basically follow me because I keep sharing a lot of content around fintech. And I don't know whether those of you are know me about it personally, but let me just take a few minutes. I worked for NASDAQ earlier to implement stock market manipulation solutions for various fund managers like JP Morgan and Open Markets and other clients. And I worked with various fund managers to build the solution while I was working for SS&C, Fenergo, and did a lot of setups in during the day to help the fund managers to set up the entire process for fund management, investment management, wealth management, technology. That's how I was passionate about stock market, because my day job and night job was same. And during the day, I used to work with fund managers, gain a lot of insights, build my own thesis around it. That's why this peaceful weekend investing is kind of culmination of all my experience working with the great people surrounding during my 22 years of experience. So coming back to margin of safety, right? A particular you understand this. So this, the orange line is where it's a market price, right? A market, as you know, the participants are exuberant. Sometimes they are pessimistic, like how we are, and then we have a particular stock intrinsic value. What is intrinsic value? Intrinsic value is the value of a particular company which is derived based on its future growth. What is its book value, and depending on industry based sector, you have a particular industry value, and that's the future cash flows. And then you have a discounted intrinsic value, which is a margin of safety, because you have, let's say, particular company is worth $10, and you say, okay, I would prefer to buy it at 8, so that just there is a cushion. But sometimes the stocks can go up to 14, right? And that's where you need to understand how you can basically understand and be participating in that. And sometimes a lot of people are doing only technical investing, and a lot of people are doing fundamental. But when you blend this both, you can really create a magic for yourself, and especially, and then bring a system on top of it. And that's what peaceful weekend is all about. So typically when there's a red in the street, and that is a value which is created out of the even further discount to it. And that's why they say, if 1 rupee thing or $1, you get it in half dollar, right, or 50 cents. So you have to focus on that. And then market, as you start market realizing it, and there's a momentum in the market, start going up. and then you start everybody start chasing stocks, and there's a positive news on the street. That's where you should think of exiting, not adding, because that's where the news is very positive, which was there last 2 weeks. You can see there's nothing wrong in the market. It was amazing. But then suddenly there's all negative news all around, and there's a cracks happening in the stocks, and all the momentum stocks which are flying like 20, 30, 40, 50% were like literally coming down. And I'll take you through with one example, and we'll come back to this particular picture again so that you can understand this. So first thing first, let me take you through the chart of a particular stock, right? And let's the BSC, and this particular stock. Just 1 minute, I lost my pen. Hold a sec. Yeah, sorry about that. So BSC. So let's look at its daily chart, okay, and try to understand what was the rationale behind, okay. And I did cover up this talk. I don't know whether you follow me on TradingView. You can again search me Peaceful Weekend Investing here and follow me here. And I'll leave the link here if you don't have access to TradingView, which is a free tool, which is SaaS based tool. And if you see here, this is a time when I said, you know, I kind of published it online, which was, we can see with the arrow here, that I was very keen on this particular because there was a momentum which was building up, right? And I thought, okay, and I did share this on my post on the trading view. This is a SaaS based, so you can share a lot of things. What is my trade plan? I did created a complete trade plan because a reason why I did created a trade plan was I was more interest inclined towards, especially it was giving a breakout from it was giving a breakout from this particular trend line, and I was targeting this particular area which will reach, right? And if you see here what exactly happened, is the stock not only went and touched this, it also went above that. And that is where you see the magic is created. And I was having a clear target about it, and it given beyond that. And that was a published trade plan of me, and I wanted to make sure that I don't give up. And when you have such kind of exuberance in the market where you get, let's see what was the gain. The stock, so let's get, so from here up until here you got 70% gain in matter of 28 days. And when you have such kind of gains coming and sitting on you, you want to make sure you don't give back to that gains, and you want to lock in those profits before you again. And by far I'm not giving any buy or sell recommendation. I'm just trying to tell you that there was an exuberance on BSC, and now you can see it's not a bad company. It's a beautiful company to invest for long term. But when you have the clear demarcation between your trading and investing portfolio, and you know that it has gone beyond the intrinsic value, and especially the ones which I'm talking about here as example, this particular thing. So for me, this particular stock went beyond the its own, and it was here, and then I said, okay, this is a time I need to take this off the table and make sure I can re-enter again. That's not a problem, because if you're looking for long term, and that's what is exactly you understand when the stocks are overvalued, and when you think is a better time to take the money off the table. And that's where you have to draw a thin line between fear and greed, because the stocks could have run up further up, and I'm actually okay with that. It's more important is that what is best for you. Investing is extension of yourself, not anybody else. And once you know that this is what your aim was, you take the money off the table and let the market other participant take it, and that's absolutely fine for me. And because typically they say that investing is all about regret game. You when you sell it and stock goes up, you're regretting, hey, why did I sell it? When you are didn't sell it and it goes down, hey, I should have sold it. It's just a regret game. So if you can balance those both, I think that is where you're gonna create the magic for yourself, and you're peace with yourself saying, hey, I'm okay with that. So BSC was playing here, and I said, okay, great. I will take the money off, and I'll wait for it to come back, and see whether it is, giving me the opportunity to re-enter. And I think, as we can see here, this is again going to come and touch one of the moving averages, because as a law of averages, and it always reverts to the mean, and we have to look into that. And if you go back in daily chart, right, and you have to look at the picture. So it was giving you an around, I think it was 2nd of August when I was very interested in it. And why I was interested, because it was, I think it was around this period where it was and then it went on sideways, and you can see the narrow range of candles, which was telling me there was a huge, and the volume was so low, it was telling accumulation happening, and suddenly there was a pump. And that is the area where you just want to take the money, because after this wick, you want to make sure there was a tiredness in the particular stock, because once you are in a momentum, you want to make sure you take the sell it in the rally. Don't sell it when there is an, because it's like that, when there is an party going on, you and there's, it's just a nice analogy. When there's a great party going on and you are inside and dancing and have a party, you exit before the party ends. You don't want to be there standing last man, because everybody will rush to the same door, and that's when the stock price start crashing down. That's the analogy, you can keep it. But again, you got the idea. So I'll come back to the intrinsic value. So now I hope you got this. If you haven't, if you got the value out of this video, just subscribe to channel or put a comment, write additional notes and put it in comment box below, so that others can also benefit from that, because that is how not only you will benefit, but others also will benefit. Thank you so much for that. So let's move to the next part of the video, which is looking at the sectors, which is interesting, right? So let's look at that. Now, market is, let's start with the index itself, what we were talking about. So Nifty and Nifty Bank, look at this. And I'll come back to the intrinsic part, because that is where I'll keep coming back and referring to that. Now, from here, I think it is trend has slightly weakened, because you have seen this happening. And let's look at the weekly candle so that you get a better picture here. So after this rally, I think it is just corrected, and now it is this big candle is obviously the big candle which is there. You have to look at it, and from that perspective, but trend has not changed unless otherwise close below. I don't think the trend has changed according to me, because that's a swing low, and on the weekly basis, till the time I'll have to wait for the new trend to emerge and momentum to emerge. And keep in mind, when I'm looking at it, how do I benefit from this downtrend, and also how do I benefit when the new trend starts. And that's where you have to keep the compartment of investing and trading. So there'll be a set of stocks you always want to buy when there is a correction, because you understand the company business model, you understand the intrinsic value, you understand the long term game of that particular stock, and then you have read about it, you understand everything. So that's where fundamental plays a role big time. But the technicals helps for the long term investor like us, or busy professional like us, is to take participate in those trading burst or momentums, where you can basically not only benefit for long term stocks and take some money off the table, and also invest on those momentum sectors and churns and all that happening. So that's what is essentially Peaceful Weekend is all about. So now, unless otherwise breaks this level, I don't see any problem at all. The trend is still intact for the Nifty, right? And but obviously, there's no doubt about it that it is weakened a bit, because a solid candle here, it telling me that it could go either sideways or go, it can go up to correction below as well. So it might be this way, and then you go this, or it could further go down here, and who knows. I don't know, I don't want to predict. All I know is that at this point in time, I'll be very very uh, I will not be focusing on my the areas where I see a price action possibility. I'll keep it low profiled on that. I've taken a lot of profit on the table, and I did cover that very clearly in the community members. If you're not joined my Telegram group, do join in, because I'll leave the link below, and also shared that in my video that hey, be cautious about it, and it's better to sell. And that's why I sold BSC on the strength, because I thought market was already extending. And why did I thought? If you go back to here on the weekly on mid cap sector, right, you can see here this was crazy, so if you see, the mid caps were flying like crazy as if no tomorrow, and it's just having a small bump, so it's okay. 2 weeks after such a big rally, it's okay. Its question is whether it's going to go further down or up. I think it'll have some time of correction, because also the news flow which is coming from US about the interest rate will stay high. All that macro elements plays into factor here, because the after all, money which comes into stock market is about the risk evaluation, right? If the interest rate's going to be high in US or elsewhere, that means there is an chances that money will be sticking for the deposits where or bonds, not in the stocks, which is high risk. All right. I'm no more expert in the macro analysis, but I just look at the chart and make my own analysis, by the way. So, and then look at it, this stock, which is, I think, again, the IT sector. I still think IT sector has given a nice breakout from the range which I have been talking about it. The range has been, this is the range from last time which I was there, and it has given a nice breakout, and it might retest this level before it goes in. So that's where I will look for opportunities. And some of these stocks which I brought for you today is also from the same sector. And let's look at the reality, because that's another sector. And reality, I think, is look at these two lines. I've already shown these lines when I covered my sector analysis, and these were two lines. And exactly at this line, it is. If you go on monthly, you will understand. It is right. The reality sector is up for the long term, because the cycle has just turned, and generally it's a cyclical, so you don't want to be hanging around there for long, but you can participate in the rallies when it comes through. And after a long time, there'll be a rally which can be expected. So, and this is a reality index. So you can see it is just correcting and being sideways in that two range. Unless it crosses above 4846, I'll be looking for opportunities to add some of the strong stocks. And I've covered that strong. You can look at my video. I've covered some of the stocks already, which I'm tracking. No buy and sell recommendations. Please take it for learning purposes only. Um, and some of the things, let's look at small cap, what's happening here. Look at the small cap also again after rally. Just it is just giving a bit of an rest down or correction. Time will tell, but at this point, the momentum is slightly going to be sideways or downward trend. So, I'm I look at it. I'm not a bottom up person. I look at the index, look at the sector, look at the companies, and try and make sure that I don't want to be holding on to stocks. My objective is to remain minimal in the especially when I'm playing momentum. I want to be minimal time in the market so I can get the maximum gain and mileage. That's how I'm looking at it. So pharma, which I have shared with you, that I am buying through ETFs, and so which there was a big candle which came in, but again there was a bit of buying which is coming in as the market is about to start here for this. So I'll try to wrap up this so that before the market starts, so I can also focus on it. The stocks which I am interested in for this week and in my watch list is the third part, is Birlasoft has given a good run up, so I'll wait and see whether it comes in the buying zone. I booked some profit there. Emphasis is, you can see here, and this is on the weekly candle, it's just tightening a bit, which is around the moving averages, and you can look at it here. Some of the key levels I'm tracking, if it should go and could be resistance here and can reverse. But at this point, I'm looking at to come to buy zone before I can add more. And by the way, my views can be biased because I might have positions in these stocks. So please take that into pinch of salt, and I can completely go wrong. Mastic is another one which is exactly the same setup. If you can see here, right? It's on weekly chart, moving averages, and it is kind of hovering around that. And DLF is always all-time favorite, because this is gonna be a massive breakout if it happens. It is multi-year breakout. Right now, it's testing that zone. And if you remember, I covered this particular stock when it was 335, and it's already been from 335. The stock has gone up almost 516. So there's a time for booking the profits and looking at it. But I think it is a long-term stocks for now, because it is kind of, when I said that, hey, on the verge of giving multi-year breakout, it is just testing that. And that is the same thesis which I kind of gave the analysis last time. So I'm just following up on that. And that was a monthly chart. See that how beautiful it has gone in, right? So do follow me on TradingView, follow me on the other channels as well, so that we can stay connected, because there's a lot to learn, because investing is all about staying connected, understanding what's dynamics changing. So if you are sticking till the end, give a thumbs up to yourself, and push a like button, because that helps the channel to grow, and other like-minded people, peaceful weekend investors, can join into the channel as well and benefit from what I'm trying to share here with my learnings and experience. And obviously this is all learning what we're trying to do here. So coming back to so these are the some stocks you can, looking at it. I'm not doing much of an activity other than just keeping a tab on my long-term stocks and adding into it. That's my focus will be for next couple of weeks. But I'll be keep sharing my view every week. But coming back to the margin of safety, you now understand that this is um, this is where you have to focus on money off the table whenever there's extended. And sometimes you can play it by understanding the value of the company. Sometimes you can see it by moving averages, because that's a lagging indicator. And stocks tend to come back. If you look at any stock pattern, if they come back and touch their moving averages, it's like reverting to the mean. That's how you look at it. Because look at this stock particular thing, right?